Hey, it's Soleil, and this is episode 320 of the Orange Pill Investor. It is the first Friday roll day of the new year. Uh, the timing was a little shitty. Um, and it's oh man, it's so crazy because Josh closed his covered calls yesterday, and that motherfucker, I don't know how he sniped it like exactly, but he was able to close his down. I've got a bunch of mine still on, so I'm gonna have to pay a little bit to buy these back more than what I had expected. And if I had jumped on, right as the market opened, maybe I could have nabbed some of that early morning price, like if I had jumped on before 10. So I don't know what's happened in the last 15 minutes. Is there some news or something? Or is it just the market doing whatever the market does? Anyway, neither here nor there. The benefit to selling covered calls in the first place is it's a little bit more higher frequency than just buy and hodl, but it's not like mission critical. So this little bit that I missed by not being online at exactly 9:30 is really not the end of the world. It's kind of like a low stress version of high frequency trading, right? I'm not staring at my screens all day. I'm not a day trader. But let's just take a look. So, my 310s were golden. I probably could have bought these back for like $100 or something earlier in the day. And now you can see that it's going to cost me $500 a pop. So let's just bite the bullet here and close all 19 of them. I think I only closed like 2 yesterday. So let's do that. Might have to walk that up a little bit, pay a couple extra bucks. Looks like I'm chasing. The price is moving against me. So let's replace it, move it up again. Okay, there we go. Now I'm using $12,000 worth of margin. So I just took off 19 of them. In order to get out of margin, I either need to sell some shares or sell some covered calls. And with the price being a little bit up, I mean, those are the green days are the days that I'm looking for in order to add those covered call positions. I wanted to reduce it as much as I possibly could during over the next 2 weeks because that could be, a, uh, a blackout period for the ATM selling, which that's a double-edged sword because if he's not out there selling shares of MSTR, he's also not out there buying millions of dollars worth of Bitcoin. So somebody else is gonna have to take over the Bitcoin buying duties over the next couple of weeks if we wanna see that price come up. But anyway, I gotta come up with 12 grand. So do I want to sell 12-ish at the money and just call it a day? Or do I want to go out to see 45 days to expiration is unfortunate. They do have the 460s now. They only had up to 360s yesterday, but actually that's not terrible because I could sell 12 of them at 460, build in about what 50% upside and still get myself out of margin. I would be capping 12-ish 1,200 of my delta. I've got 4,000 delta. I could set up 40 covered calls potentially. I have 5 on. Actually selling 10 actually kinda works out perfect because at any given moment, if I have about 25% of my positions covered, that's probably a reasonable baseline. You can see over here, um, and now I'm getting a little bit nervous. I don't see anybody in the chat. Anybody hear me? Um, I've still got PTSD from when I did like half an episode with a black screen and no volume. But I think 25% of my delta covered is reasonable. Hey, Kobe, thanks for confirming. Appreciate you. And thanks, M. DeBoer. So you can see that I have negative theta. I added this column recently after I saw Tom Sosnoff's recorded seminar about every option seller should have a reasonable amount of theta related, ratio compared to their account. And he was guessing about zero point 0.1 to 0.3% theta, um, excuse me, zero point 0.1 to 0.3% of your net liquid asset should be represented in theta here. So not only do I not have positive theta, but I actually have negative theta because of all of the long call exposure that I have, and they're all decaying every single day. So if I want more premium draining into my account than's draining out, I need to get this positive. So let's see if I add those. If I add these 42 days to expiration calls, I can probably just add 10 of them. No, that's not gonna quite. So here's another annoying thing. Bid-ask spread here is $3 wide on this February 14th expiration. That's kind of annoying. Maybe just because they added it, there's not a lot of volume there. But if I go out to 49, I could probably sell like 10 of these at the 450-ish or even the 470, and that should get me even. So let's do that. 50% upside. I'll do 10 of them. And then I will take a peek and see what my theta turned into. Okay, so I still have negative theta. That's kind of annoying as an option seller, but I would have to add a bunch more. Where are they? Yeah, I would actually have to add 20 more covered calls in order to get to positive theta. And that's just because I YOLO'd into so many of these long calls. And what I really should have done back here in November, and I didn't have to catch the top, but just anywhere in here, I should have probably peeled off maybe half of my long call exposure. You can see on the implied vol chart, March, when we had the pump, we had an implied vol explosion. We had another implied vol explosion here. This should have been, oh, an alarm bell should have gone off that I should have just really, really taken off a bunch of long call exposure and just hammered really hard at selling covered calls. I added a few positions and I took off a few positions, but I didn't really do nearly enough. So my account's probably down 2/3 from all-time highs, which feels brutal even though my account is up 4x over the past year. So it's all a matter of perspective. Like if you zoom out, but it's hard to feel like you're to remember that you're up when short term, you know, those those losses just feel more a little bit more painful and more fresh than the gains. All right, so I'm not inclined to add any more right now. I don't like my theta being negative exactly. However, if the price goes to 325, 350, something like that, I will continue to just add more positions. I don't want to cap my upside just yet. So take that a little bit slow. This, even though theta's not where it should be according to like a tasty trade strategy, I'm okay with that for now. Selling just enough covered calls to make sure I'm not using margin. There's really no excuse for me to be still using margin at this point. So I like that. Nothing else really to do. Like these January 660, 760 call debit spreads look like they're going to be pretty giant losers. Nothing to do but really just sit around and wait for those to expire worthless. Same thing with the January 17th 1080s. I got a little full of myself, or a little FOMO, I guess, when the 1080s came out, and I'm like, "Ah, sure, let me just buy a couple of these January 17ths," even though it was in my no-go zone. It was under 90 days to expiration, and even though I have kind of have a policy of not doing that, I did it anyway, and so that was a good reminder why I don't buy long calls under 90 days to expiration as a rule. Unless I have, like, some legit purpose, um, a call debit spread, as part of a call debit spread, maybe, but yeah, just didn't make any sense, but, when it seems like the number's just going up forever, it, it's easy to fall into those kind of traps. The other 5 covered calls that I have against these 5 leaps have been open for a week. I could technically close these and roll them, I suppose. Because they're only worth about half of what I paid, but what did I just roll these other ones to? I just did so if I roll them to the 470s in February, I can get an extra 400 bucks. Hmm. Maybe I'll sit on these for another week. This account obviously is not diversified in a stock portfolio sense, but it doesn't mean that I can't diversify expiration dates, right? So I've got 5 days to expiration here. I've got 10 49 days to expiration here. That might be cope, like convincing myself that I'm diversified, even though I literally have one stock in this portfolio. But it, it's technically true. So I've got 20 of the 530s in April that I've had for 64 days. These are just barely in profit. I think at one point I could have sold these for like 5x profits. To say that I regret not doing it, kind of do and kind of don't, because like you never know. But my plan all along, so I have stuck to my plan. I will say that. My plan all along was just to wait until these are 90 days to expiration. So on January 17th, when we have our um, quote unquote historic expiration, I will roll these out to May, June, July, and just make sure that I don't hold these under 90 days to expiration. You can never have a long call expire worthless on you if you never hold it to expiration. And so whether these are up or down, I will simply not let them get under 90 days. They'll have some kind of value. I mean, unless the MSTR, dropped in half, these would get be completely crushed. So that's always a possibility. Um, but that's another strategy that's in this account. So June's, I've got 10 of the call debit spreads. These seemed like a good deal at the time when it looked like we were going to 1,000. Um, you know, no telling what will happen, but I'll probably do something. I'll probably make a decision whether to keep these or roll them out again at 90 days to expiration, kind of the same philosophy. So, what is that? April? No, March. April, May, June. Yeah. So in March, I'll probably have to make a decision on these, what to do, whether to keep, roll them out or just take them off and cut my losses. The June 1080s, I'm not worried about, and that doesn't mean that I think we'll be at 1100 in June. That just means that in the next 3-4 months, there might be a rally that would let me at least break even on these or, take some profits again or roll them in March. I've got the 5 leaps. This is still another strategy. The sole purpose of me buying in the money leaps is to sell covered calls against, which is what these bad boys are. And then finally, I've got, oh God, annoying. All right. Hopefully that's not too small. But finally, I've got the December 2025 and the January 2026s. And the 2025s are still up. The 2026s I bought kind of near the top. So these are absolutely wrecked. These are down like what, 12 grand each. So 36 grand total. Not worried about these at all. We had 2 major rallies in 2025. So for Bitcoin to get to 150, like, um, we've got to have at least 1 or 2 more in 2025. So that's my base assumption that we'll get another at least 1 more of these, face melting rallies where, profits will be able to be taken on these. So, not diversified as far as assets, but diversification on strategy, um, can give you a little bit of flexibility. So, not terribly happy that my theta is negative, but I also don't want to rush into selling covered calls right now, right when the blackout period could start. Kind of uncertain about whether MSTR can sell ATM a week before earnings, 2 weeks before earnings, or not really sure. Wait a minute. Am I early? Are they about to do Q4 earnings? When did they have? October 30th. So November, December, January. Yeah. So they should have. Actually, I might be way early. Okay. So I think I was getting confused between the January 17th historic expiration and their actual earnings. So they're not going to be in the blackout period yet. That does kind of change things. Hmm. Yeah. So it's really right around the time of January 17th expiration that the blackout period might start. So yeah, I might have to rethink that. Let me check the chat while my brain starts working. We'll see if anybody in the chat was correcting me. Willet and Curtis, thanks for confirming. Kobe said, bro was like, am I talking into the void? Dude, that's exactly how it felt when I did that. And somebody in the comments, several people in the comments were like, can't hear you. And I'm like, holy shit, I've been ranting for like 15 minutes for nothing. Patrick, good morning. Stock is up. Yes, it is, and glad to see it. Howard says, Soleil, I loved MSTR for covered calls because it's a bullish play, and I'm sure it's going up over the long run. But now looking at the idea of keeping Theta positive and how MSTR's vol is mostly to the upside, I'm wondering if I'm picking up pennies in front of a steamroller. So excellent comment, and I did a video around that idea. So the way that I look at pennies in front of a steamroller, I think that that saying has been misapplied to selling covered calls because the steamroller, in my opinion, is for the naked call sellers because they are, um, they're maximizing the use of their capital to try to collect as much premium as possible. But since they don't actually own the shares, and they're probably just trading off margin, they are running the risk of having to buy the shares back very, very expensive. So I don't see getting my shares called away as getting run over by a steamroller, but the naked call sellers are absolutely playing with fire. And to me, that's picking up pennies in front of a steamroller. Now, if we want to say that missing out on upside is getting run over by a steamroller because of the way it feels, I guess that's possible. Um, yeah, I'm definitely the market is definitely toying with my emotions because sometimes sometimes like in March when the price ran up, my I was selling the 1400 strikes and the price went to 1700, so I missed out on like 30 grand of upside on 3 covered calls. So somewhere between 75 and $90,000 I missed out on just in a week. So that definitely feels like getting run over by a steamroller. But then I let that kind of give me, shake me out of my conviction, and then I didn't capitalize on this sideways chop as much as I should have. So I let getting run over by a steamroller, if you wanna call it that, um, you know, kinda shake my strategy. I did build up a good long call position here, so I was able to profit greatly from this. But when we hit this peak right here, I was still a little gun shy, and I didn't take off as many long call positions as I should have. I didn't add as many covered call positions as I should have here. So I also didn't capitalize as much as I should from this, and I didn't protect myself to the downside. And, you know, losing 2/3 of my account between November and today feels like getting run over by a steamroller as well. And I wish I would have picked up a bunch more pennies. Um, so yeah, if you're selling, when the price was 227, if you're selling the 250 strikes and the price goes to 500-ish, 450, yeah, that feels like getting run over by a steamroller. It's just completely unpredictable. And, Thomas Sowell said there's no solutions, only trade-offs. And that's just it. I mean, you're either gonna um, not sell them and have unlimited upside, and you can collect it all when it goes up to here. And if you're smart enough to sell at the top, then you don't have to deal with it going back down. Or you can sell the covered calls all along the way to on some portion, reducing your cost basis, and it makes these the price retracing not feel so bad. It's I don't have a solution for that problem. Um, but yeah, I'm assuming at least one or two more of these face melting rallies will occur for Bitcoin to get to 150, 200,000, or, hopefully more. And I just want to be, I want to be ready to capture them. So I think 15 covered calls on right now is kind of fine, but maybe, huh? The price is up to 320 now, so maybe I'll just add 5 more while I'm talking. And maybe I'll just do 5 at the money. I'll add one more strategy. I'll pick up a few more pennies. Let's do so a little bit of upside, like 1% upside. 5 of them. Let's see if this gets me closer to positive theta. Okay. That took about, was it 3 or 400? Yeah, 480. So that'll work. That didn't quite, if the price goes up to 340, 350, maybe I'll add 5 more. That would give me to some positive theta. And I'd still have, even now, I still have 3,600 delta. Now, if these go deep in the money, see, the delta's a little bit misleading. If these 5 go in the money, delta's going to approach 1 for every single one by Friday. So this 228 delta is going to turn into like 500. And I'll have to pay through the nose for these big time. So we'll see. But yeah, me being expecting the blackout period was a little premature. So that's probably not coming until after the January 17th expiration. So I don't mind risking a few extra positions here. But great comment. Patrick says, if there's an announcement each Monday that MicroStrategy has bought additional Bitcoin, is it safe to assume that when the announced Bitcoin purchases stop, we're in the blackout period? That's kind of what I was thinking about as well. And so, yeah, if Monday comes around and there's no announcement, I guess that kind of makes sense. Unless they're allowed to buy Bitcoin with their convertible bond offering. It's probably only the ATM selling they're not allowed to do. So they could make a Bitcoin buy announcement, I'm guessing, with some convertible bond money. But I think we would have to hear that they did a convertible bond deal in order for them to have funds. I don't know if they have spendable. I can't imagine that they would just sit on a ton of cash. Like if the convertible bonds gave them $1 billion, they're not just going to sit around. I would assume they're going to spend it as fast as they possibly could, as long as the market was right. So yes, that's kind of what I was thinking as well. But now that I think about it, they could, if they have some convertible bond money, they could be making purchases with that during a blackout period, because I think the blackout period only applies to ATM selling. Kobe says, with Bitcoin trading over the weekend, what's the effect of rolling on Friday versus letting expire and selling new covered calls on Monday? Can you just talk through the scenarios? Yeah, that was kind of something that I was thinking about, was if MSTR was, if the market was down on a Friday, maybe just close them and you know, cross my fingers and flip a coin and hope that Bitcoin trades up over the weekend and then MSTR opens up on Monday. I had absolutely considered that, and was planning to try to do a little bit of that. But since today is already a green day, that kind of didn't really apply. If today was red and we were at 290, 295, then I would have just closed these. The stuff that was expiring today, I would have just closed them for nothing. Basically just whatever little pennies I had to pay to close them out, I would have done that. And then maybe not opened up as many. So what did I open? I opened 15. See, I had 5. Yeah, I opened up 15 today. So if the market was red, I probably would have just sat on my hands and waited till Monday. And I don't know that there's any mathematical or statistical edge to that. Could just be complete superstition. But in a sense, if I'm bullish on Bitcoin forever, like it's going up forever, Laura, then on average, maybe 51, 52, 53% of the time, it will open up higher on Monday than it closed on Friday. And if that's the case, could there be some tiny little edge that could be gleaned from that? I don't know, but it's a fun little superstitious thing to maybe pay attention to. Mick Badrian says, "Do you track how much you outperform the MSTY?" I haven't, and I probably should because when I covered that stock, I kind of just assumed that a covered call seller could outperform them because you won't have to pay them a management fee. But it could be that because they're a company and, they might be able to borrow at cheaper rates than I can. They might be able to get more favorable, margin usage or something, or I don't really know what kind of advantages they have, but those advantages would have to outweigh the management fee. Um, yeah, I don't know. I think I bought like one share because I wanted to see what the dividend was, and it was pretty good. So somebody that doesn't want to do this for themselves, maybe it makes sense. But this is fun for me. So maybe if I'm so old and decrepit one day that I just don't want to be bothered, I would look at something like that. Patrick says buy and hold pretty much outperforms MST on its own over the long run. Yeah, that's kind of my basic assumption as well, but I cannot confirm. I haven't done the work to be able to say that for sure. Howard Wetzman says Q4 ended. Why wouldn't they be in blackout? Also, given Josh's scenario, they can ATM during blackout if it's set ahead of time algorithmically. Okay, did not know that. And then says, I have no idea if that's right, but it is when insiders sell. So Q4 ended, but I don't think that has anything to do with the blackout period. I think the blackout period is when they know what their earnings report looks like. They know what they're about to announce to the world and all of the investors, and they can't act for a short period of time before they make the announcement. I don't think the actual Q4 ending matters as much as when they're going to give information to the public. They have the information, and if they were out there selling ATM with information on hand that everyone else doesn't know, that would be a problem. Morning, Scott. And Patrick says, I would guess we'd hear about a convert offering, and also if they used new convert money to buy Bitcoin, it would be a much larger Bitcoin buy than their ATM usage, is my guess. Yeah, good point. All right, let's take a look at the IRA. Okay. My 315s are now in the money. So I could have bought these back just 20 minutes ago, probably for a couple $100 cheaper. That's hilarious. Let's see. I've got $200 in cash. So I will probably need to roll these out for a credit, even just to be able to afford to close them, for God's sakes. So let's do that, which makes sense anyway, because I do have two leaps, and the only purpose for me for these leaps is to sell covered calls against. Now, I think I did make a little bit of a faux pas because I sold these just above at the money, and that was kind of a no-no, even though I do have 600 delta here, so it's completely fine because I could say, okay, these two covered calls are against these shares, but in my head, that was not really the point. If all I had were these in the money options and I was selling covered calls against them, a 315 strike would have been dangerous. With the 175 strike plus the value of it, let's just say 175, that gets me to 350. I shouldn't have sold a covered call under 350 if the only 2 positions I had were these long calls. Just because with a poor man's covered call, it's you have to be very careful about which strikes you select to make sure that the value of the leaps can appreciate as fast as fast, as fast or faster than the value of the short strike goes against you. And 315 strikes was probably a little too aggressive. But again, it was fine because I own shares, but it wouldn't necessarily be fine if the only thing I had um, were these leaps. So I'm gonna roll these out to. Mm, they don't want to let me roll out farther. You know what? I could do these with a multi-select. Let me see if. Okay, I'm gonna try this in real time. I'm gonna try to. So I have 2 cells here, right? So if I add buys, that looks like 2. And then I go out to February 21st. And I said that I needed to go to at least 350, which would be fine. I'm gonna go out to the 450s again, and let's sell. All right, so I'm creating my own roll. I'm buying the 315s on January 3rd, which is gonna cancel out the 2 that I opened. So I've got 2 January 3rds buy to close, and I've got 2 February 21s sell to open. Not quite 50% upside built into these, but this is definitely much safer than the weeklies that I had set up. So try to do a little bit better with that. All right. They want to give me a little bit less money. All right. Fills. That also gives me a little bit of cash to play with. And since the share price is up, let's just make sure that's all I want to do. Or do I want to add one more? So I rolled that one. And since this is a green day and I have negative theta here, let's add another one. And this time I can sell some at the money against my shares. So let's add another 325. Let's see what my theta is now. Did I get positive theta? No. You know what? Let's sell one more. Come on, Phil, you bastard. There we go. That should get me close. Okay, so I barely have a little bit of positive theta here. Taking a little bit of risk with these 325s, but that's fine. Again, I've got 300 shares. I've got 2 leaps. I could sell 5 covered calls here, no problem. So setting up 4 is completely fine. If MicroStrategy rips to 350 or 375, will I regret it? I suppose so. But I've got cash now. So, I mean, I still consider MicroStrategy a buy, but if it's a green day, maybe I don't want to add long call positions. I could dollar cost average into these June 1080s. to make, drive down my trade price a little bit. Hmm. Can get 3 of them. Sure, why not? So 1080 June 1080s. Of course, no fill. Let's pay a smidge more. And let's see what my trade price is now. Okay. So my trade price dropped from like 3,000 a contract to 2,100 a contract. So if the price, does some good things, it'll be a little bit easier for me to break even or make some profits on these. How much cash left? $214. Okay, that's not even enough to buy a share, so I think we're done there. I'm finished with this guy. All right, the joint account again. So this one, you can say, a good example of picking up pennies in front of a steamroller. I could have closed this for profit just 30 minutes ago, but now it's completely upside down. So let's sell. Let's roll this out to next week. Let me just close it. I want to see what my total delta is on this one. This is probably just barely over 100. All right, so now I'm using $1,000 worth of margin. Gonna have to make sure that that is not happening. So I am, negative theta here. And I've got, oh, okay. For some reason, I was looking at this CLSK row because I have this stupid ass call debit spread here that I was demoing that I thought would, oh man, I thought I would be rid of that thing by now. But yeah, so I've got like 354 delta here. I've got 100 shares. And between all of these leaps, individually, these are not in the money, and I wouldn't be able to sell covered calls against these individually. But combining 2 of the 530s, I can technically sell covered calls against, like multiple leaps. I'm not sure what the formula for that would be, but it would be totally fine. But again, let's do a weekly. So I need to come up with $1,000, right? So let's just get myself there. So I can sell a 330, tiny little bit of upside there, but I got rid of all my margin usage. And a tiny little sliver of positive theta. So I'm happy with that. Still have my December 380s. I would be super psyched for those to go in the money. I could technically start selling covered calls on these above the 480 strike, approximately. Adding the strike to the value gets gets to approximately a safe covered call selling zone. And then, yeah, I could sell a couple more covered calls against these. But anyway, I'll wait for the price to rally before I start doing those shenanigans. All right, this one I've had on for a week. I got the 470 strike, which is approximately what I was already rolling out to. I can't buy it back for half of what I sold it for, so I will give this at least one more week. Don't think there's anything I need to do in this account. Nah, I'm happy with this one. Let's check the chats. Scott says, I'm hoping for a convertible bond orange dot from Sailor on Sunday. Oh, hell yes. That would be amazing. All right, let's check the 5K account, which had been drifting closer and closer to 5K again. Year to date, the chart looks so much different after December 31st. All right, so you can see that I have a couple of 110s on here. I did trade these before the live. My son and I trade every Friday as well. So basically, he's got 100 shares of CLSK, and we set one covered call. He had a little bit of cash, so we sold a CLSK put. He had 100 shares of Riot, so we sold a $12 call. And with his last little few $100 of buying power, we sold a TeraWolf put. So that one's kind of new. I don't really I haven't read I've read I've read one, is it 10K? I've read one 10K in my life, and it's only because Investor Kage, a TradFi investor, kind of shamed me, and because I was pumping, Tesla's bags a little bit and talking about how great they were, and they're not just a car company, blah blah blah. And he's like, "Have you read the 10K? Because I have." And I'm like, "Ah, fuck me, I haven't." So anyway, he shamed me into reading the damn thing. I didn't really understand what I was looking at, but the point of that story is I don't do research. I don't know if CLSK is better than Riot. I don't know if Riot is better than TeraWolf. I don't know if Mara is good, bad, or ugly. Um, I used to trade the hell out of Hut. I really liked Hut, and I think that one was been on a tear. I'm completely agnostic about the mining companies. They're all Bitcoin derivatives. So, absent complete mismanagement, I think they're just all tied to Bitcoin's price. Some of the other guys are much more knowledgeable in which ones are good AI plays and this, that, and the other thing. So, check out Adrian and his content. I think he goes over some of that stuff. But yeah, I just don't bother because I've done enough research in Bitcoin that if it's a Bitcoin derivative, I'm just bullish, during a bull market. And I want to make as much money as possible, but I also want to make as much money per time spent as possible. And just doing all of that research has, you know, not doing the research hasn't stopped me from making money. So I just kind of don't care. Um, same with technical analysis. I could probably draw support and resistance lines, but beyond that, I don't know. You know, I think you could probably zoom in or out and find head and shoulders, any of this other horse shit, if you wanted to. You can just find whatever you're looking for. So it's probably like reading tea leaves. Um, if somebody is doing TA and getting an extra 10-20% returns, okay, that makes sense to me. But I'd be interested to see if anyone has those kind of experiences. It hasn't been necessary, and frankly, I'm just too busy to do things that may or may not have a negligible positive effect. So the even just training the miners is only because I wanted to see if I could make money in a 5K account where I couldn't afford MicroStrategy, right? So for me, if I can afford MicroStrategy, that's what I'm trading. If I can't, then I make do with what I can, right? Like at one point I made enough money where I was able to buy what? I was able to buy like a 450 call for, was it $1,000? Yeah, I paid like 1,100 for it. I think it was worth 10 grand at one point, but I put together 1,100 buying power. I think when my account value was worth about 20 grand, so that was like 5%. Probably a little bit too expensive, but I couldn't help myself. So Anyway, that was the long ass way of saying I got to deal with these January expirations, but some of them were already done because me and my son traded already this morning. And this is a good example of why when I say, okay, I try to build 10% call away value in, and I try to collect at least 1% a week. Well, I got paid 21, which is probably closer to 2%. Um, CLSK was around $10 a share last week. So I built in, I mean, I might have been 9.5, really, if I chose the 10.5 strikes. But I built in 2% return on capital in the premium price. But I'm not actually going to be able to collect it all because it's still worth, even though there's only a few hours left on the trading day, because the price is so close to 1050, it still has extrinsic value here. So I collected 2% premium, based on the underlying share price last Friday, but I'm only able to capture 1% or, half of that 2% this week. So there is a little bit of friction built into the system. If the price of CLSK was closer to under $10, maybe I could buy this back for $1, but I'm not actually keeping all of the hypothetical best case scenario premium. So let me just close 6 contracts. Let's see if I can get away with 11. Or whether they're really gonna make me pay the full 12. You rat bastards. All right. Now, okay, so the price is running up on me. So you can see I'm chasing. I probably could have gotten those closed for 12. And I was trying to get 11, and now I can't even get them filled at 12. So let's see if I can repeat that mistake. That would be super fun. Partial fill. Okay, whew, there we go. All right, so now I have 600 shares that I can sell covered calls with next week. The strikes will probably be a little bit different. I had anticipated just coming in and picking the 11s. That would make it easy. You know what? Oh God, now that's only building in 5% call away value, but I can get 3% on the premium. I'm just gonna do it just so that I can only have to deal with. Maybe not. Okay, let me build 10% in. I'm just gonna go ahead and do it this way. That's gonna separate my strategy from my son's strategy anyway. So that's fine. All right, I had to buy those back for 11. I'm selling them for 23. So again, that's another net 1% approximately this week. And of course, they don't want to fill. I thought I was selling at the ask price. So let's do 0.23. Okay, that got fills. All right, put another $100 in my pocket. Same scenario with these Riot $12 calls. Sold them for 21 instead of buying them back for cheap since the prices rallied. Now I got to pay 15 a pop. So, yep, buying for 15. I could have used the roll feature. Did I get fills here? Partial fills, 2 of 6. Okay, there we go. All right, view all options. Let's sell. The current price is basically, let's just say $12 a share. So going up approximately $1 to $1.20 gets me to the 13 or the 1350 strikes. Let's go 13. 6 of them. And I'm just, you know what? I'm just going to smash the bid so I can get this over with. Okay. Do I have anything else expiring today? Okay, I've got this Riot 10.5 put. That's worth nothing, so let's just close that bad boy out. That will return $1,050 of buying power back to my account. Nothing else expiring today. So let's see if I'm using margin. Okay, this says that I have low margin risk. I have 1,400 in cash, and I'm assuming this options collateral is probably a combination of the puts that I sold. Yeah. So I've got the 9.5 CLSK put, and I've got the 5.5 TeraWolf put. So I'm probably using like $100 worth of margin, which is completely fine in an account this size. Trying not to use margin if I don't have to, but this is completely reasonable. I opened up this 600, 700 call debit spread. This looks like it's going to be a giant loser unless something amazing happens in the next 2 weeks. Not really expecting that. True North calls are going to start back again next week. I don't know if it's going to be Monday or Wednesday, but kind of super psyched about January. I think Adrian's got a seasonality chart, and I think historically it's been green. So I have my fingers crossed. And then Q1 is going to be huge for Bitcoin and MicroStrategy. We've been talking about it's kind of like a slam dunk that they get into the S&P 500. And I think Jeff said that based on their current Bitcoin holdings, like, I don't know, Bitcoin's price in Q1 only has to go up like $5,000 in order to likely qualify for the S&P 500. So that's bullish, but what if it doesn't happen? Like all these S&P 500 expectations, if we miss Q1 S&P 500 qualification, we love to talk about the catalyst, but that would be an anti-catalyst. Long term, I think it wouldn't matter. Like maybe we just postpone S&P 500 by 3 months. But that would probably be a painful repricing event. Doesn't change my thesis long term. But and but like I don't really even do valuation models or price targets. But you should either have an official one or an unofficial back of the napkin math one. Like if you think this catalyst is good, then do you think it's a 99% chance it happens and a 1% that it doesn't? Like that 1% has to be factored into your trade scenario. Like, what's MicroStrategy's price if we're at, 110,000 Bitcoin Q1? Okay. But what's the price if we're at 80,000 Bitcoin? That would be pretty shitty, but let's just look at the chart. Again, super basic technical analysis. It's all I'm capable of anyway. But if I'm drawing a support line, I'm drawing Bitcoin's support at 72. If you wanted to be a little bit generous, you could call it 75, but that's support. More recently, support is 90, right? We bounced off of 92 here. So the more support lines, or data points you get, the better. But like, if if we crack below 90, I mean, there's nothing but air between there and 72. And if Bitcoin's at 72 or 80 in Q1, we ain't getting into the S&P 500. That's a fucking wrap. Now, if we have a big quarter after that and Bitcoin's at 125 or 150 for Q2, okay, now we're in S&P 500 again, and it would completely wipe out all of the negative earnings. If Bitcoin's at 125, that probably wipes out negative earnings for like the last decade. So, but would that be an insane repricing event? I think so. So anybody that's YOLO'd into, well, let's see, yeah, so Q1 we won't find out until February, March, April, right? End of April, beginning of May. So April, May, June, July. So if we get in Q2, it would be July, August. So if you have your hopes set on, like, even my Junes would be at risk in that scenario. All of these Junes would be completely fucked if we miss S&P 500 in Q1. I think the repricing of, it would be a short-term repricing event, but it would still, oh man, it would still be extremely painful if Bitcoin's at 80K end of Q1. I still think we would be fine for the rest of 2025, but this is kind of why I don't mind picking up a few pennies in front of the steamroller, because the steamroller can run your ass over in both directions. I don't know. I might have to be the bear of the group. Like, if I don't want to be the bear, but if I have to be the fucking lone bear, maybe I'll do that. Adrian's got some sobering takes every once in a while as well. Like, look, I think he got a lot of heat before when he said we could see, what did he say? Did we say we could see 180 or something like that? Worst case scenario. That would be a depressing couple of months of live live streams for me. But you have to figure out what percent chance you think 180 is even possible. If you think it's a 1% chance, then you have to build that 1% chance into your portfolio. But yeah, I don't want to spread doom and gloom, but I'm as bullish as ever, but the timing is not promised. Like, I was FOMOing into, okay, we're going to 1,000 here, right? I just knew, okay, we're going to 750, we're going to 1,000, but we didn't, right? We got 2,000 a share pre-split, and then we saw 1,000 before we saw another rally, 6 months later. I hope it doesn't. I hope it doesn't take us 6 months to see another rally. But the market is a statistic, not statistic, a sadistic fuck. So we shall see. 94 says, "Good morning, Nithu. More green days like this for the next 3 months, God willing. I also have my fingers crossed." Greg W, I see Josh is loading February 2025 580 calls. He's loading up on longs or shorts. I assume he took off all his shorts, even though 580 would be building in like 40 or 45% upside. Huh. Okay. I'll have to check his channel and see what he's up to. But get any last minute questions in there if you want. That is it for me for now. I need to hit the gym. And longs. He's grabbing 580 longs for February. Okay. He's an absolute daredevil. So and I think I understand half of what he's doing. But yeah, I am not buying any longs under 90 days for the rest of this year. he's a wizard in there, and again, just because you're buying 580s doesn't necessarily mean the price has to get to 580 in order to make money. You just need a rally in between now and February in order to exit those positions at profit. So, let's take a look at them. February what? February, let's just go to February 14th. That's halfway. Oh, there aren't any 580s here. February 21st. Okay. I mean, you can load this into optionsprofitcalculator.com and look at the chart and see, okay, by January 31st, we need to see, I don't know, 525 to be in profit or something. I'm just completely making up numbers. But as long as you get a rally between now and, end of this month, you could probably capture some profits on these. And if I'm guessing, he just wants a bunch of gamma exposure. The more short dated the options, the more the price is going to fluctuate based on the underlying's price. And so he may be comfortable with that kind of action. And I'm just not knowledgeable enough on how to trade in and out of those things for me to make that part of my strategy. Now, this may or may not be a coincidence, but you can see that this is the 2 standard deviation line right here at 580. Um, if I was selling these, I'd probably be at the 1 standard deviation. Um, I don't know if this is significant, but I almost kind of feel like it can't be a coincidence that the 580s are right at the 2 SD line. Um, but again, I don't know. I don't know what the base assumptions are for this trade. I mean, the basic assumption is that you would have to get a rally in the next 30 days in order to be able to sell these for more than you bought them for. So, that's the bullish assumption. And I don't know if he picked the 580s because they're at the 2 standard deviation line or not, but that seems like too big of a coincidence to at least ignore. So, appreciate that. Greg W says, I think he was waiting to see if we approached the 320 range. Yeah. Yeah. There's gonna be, the closer you get, the more gamma you're gonna get. So that's why I didn't mind dollar cost averaging into the Junes. Like, I'm gonna get more gamma exposure on my Junes than I am my Decembers. I'm just not, I don't know, maybe I'm too much of a pussy to go under 90 days to expiration again. I did that with these 1080s. I FOMO'd into these and, I'm gonna lose $7,200 on these, 7,300. So, um, if I was buying them now for 4 cents, maybe that would be fine, right? Maybe I should just buy 100 of these 1080s, and then, if the price goes up $25 a share, maybe I could double my money or something. Anyway, clearly that is not financial advice. That is just me shit talking. All right. All right, y'all. Be good, y'all.